We usually think about housing prices being driven by things like interest rates or maybe the job market. But what if a major social policy change could have a direct, measurable impact on how much it costs to live somewhere? Well, brand new economic research is suggesting exactly that. And honestly, the results are pretty eye-opening.
Let's put it even more simply. Could a law passed at the state level actually change what you pay your landlord every month? It's a huge question, right? And it turns out researchers have found a really powerful natural experiment to try and figure it out. So where does this all start? Well, it begins with an economic puzzle that started popping up in the data not too long ago. Economists noticed that housing markets in different parts of the country, markets that had been moving together for years, suddenly started to go in different directions. And this really gets to the heart of it. On one side, you have states that put total abortion bans in place. On the other, states that kept access. And in just the last couple of years, their rent growth and the number of empty apartments started telling two completely different stories. The big question is, why? To get to the bottom of this, we have to rewind the clock to a single landmark legal decision, a decision that completely redrew the policy map for millions and millions of Americans. For almost 50 years, Roe v. Wade was the law of the land, setting a federal standard for abortion access. But then, on June 24, 2022, the Supreme Court's decision in Dobbs v. Jackson overturned that precedent. And just like that, the power to regulate abortion went back to individual states, which created an immediate and dramatic split across the country. And I mean, that split was really stark. Right away, 13 states moved to enforce near-total bans. At the very same time, another group, 24 states plus Washington, D.C., moved to keep or even strengthen protections. And boom, right there you have the two distinct groups at the center of this housing market puzzle. So this is the key, connecting these new laws to where people actually choose to live. The big idea the researchers wanted to test was whether a state's position on reproductive rights could now be a real factor in how desirable it is as a place to call home. Now, what's really interesting is how economists think about this. They have a term called a local amenity. An amenity is basically anything that makes a place more attractive. Great schools, clean air, nice parks. So the new question on the table is, could a state's policy on abortion now act like one of these amenities, or for some people, maybe a disamenity? And this is exactly why housing data is so powerful here. When people decide to move to or away from a place, economists call that voting with their feet. And the housing market is the first place you see the results of that vote. When a place is in demand, rents and prices go up. When it's not, they go down. It's a super sensitive barometer. Okay, so we have a major policy change and a theory, but how on earth do you prove the connection? I mean, how do you isolate the impact of one policy when so many things are affecting housing prices all the time? Well, this is where the research gets really, really clever. Here's the secret sauce. Before the Dobbs decision, the housing markets in the states that would later ban abortion and the ones that would protect it, they were moving almost perfectly in sync. Rents, home values, vacancy rates, they were all on the same track. This gave researchers this perfect before picture to compare with the after. So the method, when you break it down, looks like this. First, they identified all the states with total bans. Then, they did something really smart. They created a comparison group, a kind of statistical twin made up of states that kept access but had those nearly identical housing trends before 2022. Finally, they just compared the two groups after the policy change and measured the difference. Any gap that suddenly appeared could be linked back to the policy itself with a lot more confidence. So, after setting up this really careful experiment, what did the numbers actually show? All right, let's get into the results. The first major finding was in the rental market. The study found that total abortion bans were linked to a 2.2% drop in average rents. And that's relative to what you would have expected to see based on how those twin states were doing. And it wasn't just about the price tag. At the same time, the number of empty apartments, the vacancy rate, in those states went up by an average of 1.1 percentage points. It's classic supply and demand. Fewer people competing for apartments means more empty units and softer rents. That's a clear sign of weakening demand. Now you might be wondering, is a 2.2% drop really a big deal? Well, to put that number in perspective, researchers compared it to the impact of other known amenities. For instance, a major improvement in a city's air quality has been shown to boost rents by about 2 to 3%. So the effect of this policy change seems to be in the same ballpark, just, in the opposite direction. And here's another fascinating detail. The study found the effect was way bigger and faster in the rental market compared to the for sale market. And that makes perfect economic sense, right? Renters can react really quickly. Moving costs are lower, you can pack up and go. For homeowners, there's a lot more friction. You have to sell your house, buy a new one. So any response is going to be much slower. So, we've seen the numbers, we've seen the data. But what's the bigger story here? What does this all tell us about the connection between social policy and the economy? Honestly, the researchers themselves summed it up perfectly. They said, when states restrict abortion access, they may effectively make themselves less attractive to certain households. That perceived shift in how attractive a place is, that's exactly what we're seeing reflected in the housing data. And other research helps us paint an even clearer picture of who might be driving this trend. Previous studies have shown that the people moving out of these states were mostly younger adults and single-person households. Another study even found that applications from high-achieving women to colleges and band states also dropped, which hints at some really long-term impacts on the flow of talent. And that brings us to the main takeaway of this whole explainer. What this data strongly suggests is that reproductive rights policy isn't some separate thing that's walled off in a social issues box. It appears to have real, tangible economic consequences. It shapes migration patterns, it shapes housing demand, and it shapes the overall perceived value of a community. And that leaves us with a pretty fascinating question to think about. If a state's policy on abortion can ripple out and affect its housing market, it really makes you wonder, what other deeply held personal values, maybe on things like climate policy or gun laws, are quietly reshaping where we all choose to live, and, in the process, redrawing the economic map of the entire country?